Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guest today is JaLa of Olympus DAO. But first, a shout out to crypto exchange MEXC. Join using my link in the YouTube show notes and get up to $4,100 bonus. MEXC has the widest selection of coins at 1,533 pairs. MEXC, I love it. I use it. Join today. Use the sign-up code. And with that, hello, JaLa, and welcome to the show.
Hello. Thanks very much for having me. It's great to be here.
My pleasure. So, maybe pegging stable coins in crypto to the US dollar was actually the wrong idea. So, it seems like the natural thing to do, kind of like how 1990s websites were imitation print pages. But the natural, sort of your first impulse is sometimes the wrong one. So instead, OHM is going to do something a little bit different. They're going to compete with the US dollar by making a better dollar. So this will be, I call it productized monetary policy, a new crypto native stable. And we've seen things sort of like this before. We had Frax on. They have their consumer price index stable coin. This is not that, but it is a different take on what a reserve currency and a stable coin could be. So will it work? Well, we're going to find out. But first, I want to sort of pull back and start from the beginning. So first of all, you're anonymous, right? You're my second anonymous guest. So why are you anonymous?
Yeah, it's a great question. Honestly, pretty simple answer for me. It's really just about personal safety in the crypto space. I think it's just a good OPSEC, as people say in the industry. Nothing really more than that. And I honestly don't even feel that strongly about it, but I think it's a good practice.
Yeah, I've seen. I was on the road for about 2 years, going to every crypto conference on Earth and every country on Earth, and I have seen founders get screamed at in public. And I haven't seen violence, but I've seen everything short of violence. So I totally get where you're coming from on that. And you're on now. So there's some sort of council of Olympus DAO, and you are one of the members of it. So tell me what goes on Mount Olympus.
Yeah, so it's pretty cool how I think like a real organization and DAO like coalesced around the founding team, since its inception, since the inception of the DAO, and so around the protocol had been around for about a year, and this past March 22, people in the DAO felt like there needed to be a little bit more of an organization and accountability within the organization. And so contributors to the DAO voted on a leadership council of 7 people, one of those being myself, to help organize the DAO better, help set priorities, etc. And so since that time, I've been a member of the DAO. And prior to that, I came to Olympus as just a retail investor, fell in love with it, and started contributing more and more over the course of the year, and then joined on a full-time basis at that time in March.
Yeah, I remember when I first heard about Olympus, and we're gonna do the history a little bit here. So I first heard about it. I was very deep into DeFi, and I heard about it, and some of my friends started talking about it, and I was like, nah, it's a rebase coin, which means that basically if you're staking it, you get more of the coin as rewards, and it basically punishes anyone who's not staking with devaluation, and you get more coins if you are staking, quite a bit more coins, at least for a little while. And I saw OHM kind of build this giant treasury, and you basically got the OHM by supplying liquidity to it, which means you had to enter it in using Ethereum. I think it was Ethereum and maybe a stable coin or something. I'm not sure if it was a stable coin or just Ethereum, but anyway, you entered you basically supplied a bunch of other coins to the treasury. You got OHM. And this worked fabulously for a while. It got up to, I thought it was $1 billion, but I think we were talking a little bit before the show. It was a little bit less than $1 billion in Treasury. And then now, right. Yeah, so talk about that a little bit.
Yeah, so the rebasing was a mechanism, basically a mechanism for supply expansion. As you said, it was a way to align people with the protocol. You had these very high staking rates, the APRs of which were actually not super high, but the compounded rates, the APYs, were quite high. Every 8 hours, there would be a rebase in which your supply would increase. And that rate of increase is really meant to reflect the growth rate of the network. We can get into like how the network grew. For a long time, that rate did really reflect the growth of the network. And so that attracted a lot of attention. That allowed the protocol to grow its treasury. And as you said, the treasury grew through people bringing in ETH, but it was actually mostly stablecoins and DAI and Frax and liquidity. So liquidity paired tokens was the main avenue of growth through the protocol at that time.
Yeah, and I think I did not participate in Olympus DAO. I did participate in Wonderland. So, in the last cycle, Wonderland was my one mistake. I stayed out of Terra and Luna and all that stuff, and I didn't go into Celsius, and I did get into a bunch of other things very early on, like Wi-Fi. So not very many missteps, but Wonderland was one. But even so, and it was a fork of Olympus, which is why this is relevant here.
Yep.
But even so, it also built a wickedly huge. That did go over $1 billion in treasury, and when that fell apart, we basically all got half of the all-time high returned to us. So far as things, the wheels falling off of things go, not really that bad, actually, all said and done. So weirdly, it was resilient. So, and a lot of people thought, and I thought this for a while too, I thought OHM was dead. I thought the wheels came off of it and it wasn't around and it was, no one was talking about it. And then I found out OHM had a $300 million treasury still and was actively working on new versions of Olympus DAO and new products. And that sort of stunned me. So how did you guys live? Tell me a little bit about that.
Yeah. So in my mind, as I came into the protocol, I said right when it launched, I think this was all like a version of this was always how it was going to go. You would have this big run up, the treasury would grow, and then either the market would come down or there would be a little bit of a bust and it would deflate. And the proof would be in the pudding of what you did after that. So the point of building this treasury was to provide backing for a crypto native currency and really to ensure liquidity for that token in the market and then provide the ability to stabilize that token going forward. And so the last 18 months has really been an exercise in accomplishing that. And the rumors of our demise are greatly exaggerated. So we accomplished that bootstrapping phase. Now we're moving forward to the version 3, where I really think about it as the go-to-market. Finally, the product is here. People, I think, in crypto can be very impatient, and they want things to be just put into existence as fully formed, right? And something like this with such a bold vision, just that can't happen overnight. And it took a very long time to build a treasury and start to build out the legs of the monetary policy in order to make this a reality. So that's where we are today.
Yeah, no, that makes sense. And I remember Daniele Sestigali, who was one of the founders of Wonderland, the OHM fork. He talked about, he basically said, look, EOS was a failure in a lot of ways, but it was a success in terms of bootstrapping a giant amount of, giant treasury. So in EOS's case, it bootstrapped up to $4 billion in treasury. And Wonderland also bootstrapped up to $1 billion, but there has to be a second act. And he said this about Wonderland before we even knew it was in trouble. And he said, look, it's great that we have this treasury, but that's not enough. It's got to do something. And Daniele's answer was, we're going to become a venture capitalist. We're going to invest in other things. And of course, then the Sifu Gate thing happened, which is they basically had a felon as an employee. So bottom line, that came out. And that's really what sort of collapsed Wonderland, more so even than the market. So, which you guys did not have that problem or anything close to that, right? So,
yeah.
But Daniele was right. Like, there has to be a second act. You guys are now in the middle of your second act, and I started reading a little bit about it, and you started, the documents start talking about something called range-bound pegging. So tell me a little bit about that.
Yeah, the range-bound stability system. Yeah, the one thing I would comment on the second act thing is that I think the difference, maybe between us and Wonderland, and there are a lot of differences, but the idea was that we built this treasury and we had this bootstrapping phase for a very distinct purpose, and we had a mission from day one that we are continuing to build now. This was never like we'll build this thing and then figure out what we want to do with the pile of money after the fact. So we are entering our second act, but it's very much connected to the first act, right? And even connected to the writing of the script, to take the analogy even further, right? From day zero, this is a continuation of that mission, and it's we're just plodding along the path.
Yeah, I can confirm that because I read your documents very early on. I did not invest because I just didn't. I just didn't like the rebase thing. That was just my own. I don't know why I did Wonderland and not you guys. I'm not sure, but whatever. But nonetheless, I remember reading that the intent was very specifically to create a new crypto native reserve currency. You've never wavered from that initial vision, so I can actually confirm that because I did read the docs back in the day.
Yep, that's right. Yeah, so on the range bound system, so it's a good segue into the second act where I think we're going to market now, and the range bound system is, I think about it as the proof of concept for this autonomous monetary policy. We were talking about this a little bit before the show, but it's kind of a fruitless pursuit to build this decentralized crypto native currency backed by this decentralized monetary authority if you're going to have a bunch of people in a room deciding monetary policy. And so what you really need is credible and programmatic monetary policy. And the range-bound system is the first leg of that, and I look at it. And so the range-bound system utilizes the Treasury to help stabilize OHM, I think, in short.
Yeah, so the way I understand it is, you have the price of OHM is here, whatever it is. Let's say it's $100. And then you set a range of, like, say it's $10. So you have one wall up at $110 and another wall below it at $90, right? So, and you have a bot which has access to the Treasury, which is effectively buying or selling as necessary to kind of keep OHM right in that $100 price range. Is that correct? Is that basically what it is?
Yeah, that's right. So there's a target price, and the initial implementation of that is, based on trailing moving average of the OHM price, and there's a range above that, a range up above that target price and below that target price. So above that target price, at the range top, the protocol will sell OHM into the market, pushing the price back down towards the moving average and taking assets into reserve. At the bottom of that range, the protocol will sell reserves for OHM, i.e., buy OHM back from the market using Treasury reserves. And these walls are not, infinite. They do allow for price discovery in the market, especially early on, where we're not trying to tightly peg the price of OHM to anything. It's really going to be market-driven, with the Treasury helping to coax the market into stability on a relative basis. And then over time, as we tune the model, we can tighten that range to get a tighter and tighter place.
Right, and I would think that whatever the value of the Treasury is right now, it's $300 million. That forms a floor for the value of each OHM or GOHM token, theoretically, right? Like it's worth whatever it's backed by in the Treasury at the very least, right?
Yeah, so that is one way to think about it. I don't like to. So certainly there is that net asset value in the Treasury. I like to think about the Treasury more as a budget for these open market operations that are done through range bound stability. So think about this Treasury as this almost all powerful market maker, right? If you had a Treasury that was the same size as the market cap, you have extreme power in the market to help stabilize the price. And yes, I think in a wind down liquidation scenario, you could think of that net asset value, but I think it actually provides a lot more value than that as this almost omnipotent market maker. And I think as you think about the protocol as a going concern, right, that should provide a lot more liquidity and value in the market over time.
That makes sense. So, after Luna, my little brain starts going, oh my God, what are the ways in which these things can go oh so wrong? And my observation on the whole Luna thing was, Do Kwon was tricked into selling a whole bunch of UST for Bitcoin, and thinking that he was making out on that deal because he got a giant pile of Bitcoin to back Terra and Luna with, and he used Terra to buy the Bitcoin, and that Terra then armed his opponent with something like, I think it was like $2 or $3 billion worth of UST, which was then used to attack a curve pool while its pants were down. He was moving from the 3 pool to this new 4 pool thing. So he had drained a bunch of liquidity out of the 3 pool. So there was a moment there where he was at his weakest in terms of stabilizing Terra. And that is when his enemy struck with all the Terra that they had just acquired from him directly. He had armed his enemy. They were able to tip over the price of Terra and depeg it from $1 to 97 cents and 93 cents, and then all the horrible 80 cents, 60 cents, all that stuff was able to happen because of the tipping over of the curve pool, which happened from someone acquiring too much UST. So where I'm going with this is how your price, the price of ohm, is basically whatever its price is in the pool on curve, more or less. So how do you prevent someone from acquiring too much ohm and tipping over your Apple Card? Have you guys thought about this, or am I right?
Yeah, there's a few different differences. So one, we don't have that same reflexive dynamic with the endogenous backing, right? So I think endogenous backing meaning
Yeah.
Luna is endogenous to UST, right? Our Treasury is almost all it's the majority of stablecoins, and that number, like, it's around 270 million of non-native assets. So we don't have that dynamic. And another dynamic there is that so a couple different things. One of the keys, the key innovations of Olympus was this protocol-owned liquidity, where you don't have an issue of LPs pulling liquidity, thinning liquidity, and therefore having the price be impacted by less volume, because the protocol owns that liquidity, and the Treasury serves as this really like benevolent market maker, absorbing all those trades. So you don't have this, one, you don't have issue of endogenous collateral. Two, you don't have issue of third-party LPs pulling liquidity when you need it most. Right. And third, you don't have the same dynamic in the market today where you're able to obtain that amount of ohm, right, that would break the range model, right, without first acquiring it. Right. Now,
Right.
in the future, we're going to have a lot more avenues to borrow ohm, right, and therefore make it shortable. Right. But the system will be designed in a way to, like with the proper liquidity and fail safes with that in mind.
Got it. Okay. So we're talking now a little bit about version 3. We talked about the range bound. I called it pegging. You called it something else. Stability.
Yep.
Pegging's probably the wrong word.
Gentle peg, I think, is the
Not
joke
really.
in the
Yeah,
DAO. That's,
it's not really pegged to anything.
yeah.
So, but what else is in version 3? Is there anything else, or is that kind of it?
No, it's V3 is really like a wholesale change to the protocol. So range bound stability is a major part of it, right? As the introduction of the monetary policy, generally like a wholesale code refactor of the entire protocol, streamlining the Treasury, the ability to do native cross chain, which I think is very important for us and a differentiator for us. The change to providing an avenue towards on-chain governance, which is also really important for that credible decentralized monetary authority.
Yeah.
And then beyond that, not necessarily a protocol change, but a policy change that we've just implemented now is lowering the staking rate from what it was a couple 100% to now sub 10%. That's going to happen over the next couple weeks. That just passed snapshot. And a shift from the staking to ohm bonds, which is really moving to like almost like a treasury bond model, where people are buying ohm bonds instead of staking and locking their ohm up for 30, 90, 120, 1 year, for example.
Right. So, so I remember when I first looked at this, I knew I could stake ohm, and I was getting, I guess I could still get like several 100% APY, even now, right before this V3 staking. Is that correct or not?
So today, the APY or the rebases, the annualized rebases were around 200%. That's coming down to around 7%. But I want to be very clear that, rebases are not yield, right? It's really an inflation rate. And as the protocol is growing, if you're bringing in value and inflating supply, that can be real value. Right now, the protocol, due to market conditions, is not really growing, right? And therefore, that inflation is not yield.
Very good point. So basically, you're just punishing anyone who doesn't stake. So everyone who's staked kind of stays more or less even, and anyone who's not staking gets diluted. Is really how it's working, right?
Right. And the way the protocol worked is because the staking rate was so high, right? Almost any holder of ohm, right, outside of the Treasury itself was staking. And so there wasn't a lot of any real dilution going on. But that 200% rate serves as a hurdle rate for any real economic activity. And that is why it is so important, right? So, for example, if I can earn 200% inflation, right, or from staking, the inverse of that is if I'm not staking, I'm being diluted by that amount. I'm not going to go and lend my ohm on Aave and for real economic activity and earn real
Right.
yield that way. Right.
Right.
So
Go ahead.
no, so that is like, it becomes a hurdle rate for your economy, and a 200% hurdle rate is untenable.
Yeah, no, that's you're preventing your own user adoption. Yeah, I totally get that. By punishing people who help you build your ecosystem, which is kind of the inverse of what you want to do. So, just to recap, what you really want to see happen with this thing is you want people, in your perfect future, you want people to not use US dollars or stable coins online by and large. Instead, use OHM. OHM is your stable coin, if you will, that is at the very least more or less stable, and at the very most is always increasing in value at kind of a steady rate. So it's not really super volatile, but it is kind of every year going up somewhat. And because it has a better monetary policy, it is a better store of value than United States dollars on the internet. And you'd like to see everyone use it inside of DeFi protocols, metaverses, whatever, and whatever's hip online today. You should be using OHM to do it, to transact in primarily.
Yeah, I think it's very clear, right? I think part of like the crypto ethos in general, right, is the need for a crypto native currency, right? And then, you had a lot of attempts at that. And, even Bitcoin was created to be peer-to-peer cash, but has kind of morphed into more of a speculative asset, digital gold, whatever it may be, however you want to term. And it can be really sound money without being, having great utility as a currency, right, to encourage velocity of that currency. What we want to do is create that crypto native currency that people can use, right, as a medium of exchange, right, across crypto, and as a start, at our home base, right, within DeFi. I don't think that we have any designs to compete, like especially in the near term with the US dollar, right, with like in the world, right. But I think there is a need, right, for a crypto native unit of account and medium of exchange within DeFi and crypto at large, and a need for a protocol to be able to inject liquidity into those markets. And we want to serve both those purposes.
Yeah, that makes sense. Yeah, there's definitely. I mean, I didn't understand the need for a crypto native stable coin or reserve currency for a while. I was like, well, we got Bitcoin. Why do we got Ethereum. Why do we need this other shit? And it became very apparent once USDC. I mean, in modern times, I do understand. I'm talking like when I first started getting into crypto. But more recently, we've seen Circle start bricking USDC in people's wallets, right? So as long as you're connected to the old world, Web 2 banking system in some way, monetary censorship can still occur. And that can be, legitimate. It can be, we don't want North Korea doing shit. Mm-hmm. Or it can be illegitimate, like, Canadian truckers, right? You sent some money to a protester. Oh, sorry, your bank account's frozen, right? That kind of totalitarian stuff. We don't want that. And that's one of the reasons why we want to have a crypto native version of a stable coin or reserve currency. Yes?
Yeah, certainly. Yeah, I think, right, the growth and the product market fit of stablecoins, right, is proof that there is a need for a currency that is different than Bitcoin or Ethereum in DeFi, right? And then it's a question of, well, should fiat stablecoins serve that purpose or not? I think increasingly people are recognizing there's a need for an alternative to that. And that's from the holder's perspective. And beyond that, right, I think there is also a need for a monetary authority to help ensure liquid markets across all of DeFi, right? So that's what I mean, that we're looking to solve both of those problems.
Yeah, and I don't remember whether I asked this or not, but version 3 of when do you expect it to drop? Is there a due date?
The week of October 10th. So
okay. Oh, so very.
Yep. Yes.
It's September 30th as we record this, so pretty soon. Wow. Yes. Okay. So big update coming up. Okay. So last week we had on Vesta Finance. So you can go back to the show right before this one if you want to learn about that. But they told me that you guys incubated them. Is that correct?
That's right. Yep.
And
so,
you go ahead.
Sorry,
Tell us a little bit about that.
Yeah. So we Olympus had an incubation program that was meant to incubate ecosystem partners and that were helping to build the economy or economy And Vesta was one of the very successful, protocols to come out of that. All credit to them. I don't want to say like that Olympus really was the reason for their success. But we are investors and holders of their token, and we are obviously big participants in their ecosystem. I think OHM collateral or GOHM collateral on Arbitrum is the largest generator of VST. We look forward to continuing to collaborate with them.
Yes, it absolutely. I noticed that as well. So Vesta basically, creates a stable coin from over collateralized positions, right? Their own VST stable coin, and that is pegged to $1. So it is like a regular, usual stable coin in the sense of the word. And you basically you can only mint it by showing up with 1.5x worth of collateral, and they accept. I think it's 4 different types of collateral right now: Bitcoin, Ethereum. I don't know if it's there was something else, and then you guys, GOHM, and
the other one is GMX's.
thank
GLP,
you. Right.
Yep.
GLP or GMX or whatever that one was. Yeah, I think it's GLP actually. So, and all those other, and they basically have these buckets for how much collateral total they will accept at any given time, right? Because they want to make sure that the stability of their system is always within their control, so they limit it. And the other protocols are like 20% full, 30% full. GOHM, that bucket is like 100% full. In fact, I think it is 100% full. It's pretty close to it, if not that. And I noticed that. I was like, wow, they're accepting GOHM. First of all, I was surprised they were accepting GOHM as collateral. And once I understood the reasoning for it, it made complete sense. But why do you think it's so popular? Did you guys market it to the ohmies, or why is it so popular?
So I think the main reason is that people hold GOHM, right, and they're long term. They want to have a long term position, but they want to realize some liquidity. I think that's like the main purpose of it. So today there are actually this will be remedied very soon, but there are no other venues to collateralize GOHM on mainnet after Rari was mothballed. So there was a ton of leverage demand on Rari, and probably too much during the bull run. That kind of led to a little bit of the parabolic run up. But absent Rari, there is nowhere else to leverage your GOHM today. So Vesta is serving that demand. There are a bunch of venues that are opening up for GOHM as collateral very soon on mainnet, but I expect the demand to continue to be strong on Arbitrum as well, because we have a pretty, outside of mainnet, our strongest toehold is in Arbitrum.
Got it. So how many other protocols have you guys incubated?
You know what? That's a good question.
Yeah, just roughly. Do you have a sense?
Is
it just
5 to 7?
Yeah. Okay. So not very much. It's not like 30 or something like that, but still 5 to 7. That's pretty interesting. Do you happen to know, can you give me an example of some of the other ones you've incubated off the top of your head?
Yeah. So I think Debt DAO went through the incubator. Prime DAO, which is now they do like the DAO to DAO exchanges, and they do DAO tooling. I'm trying to think of some other ones off the top of my head. I'm going to feel bad if I
no worries.
if I left someone out.
I'm putting you on the spot here. Sorry about that.
Yeah, so
curious.
We actually deprecated the incubator program though in middle or early this year, just to, I think the DAO grew a lot over especially over the end of last year, and we really wanted to refocus on core product as we entered this year, and so we streamlined a lot of operations. And while the incubator it's important to foster like economic activity for OHM, it was taking up a lot of time, and it was really hard to service those incubatees in a way that was like in the way that they needed, and so we deprecated the program, but still have good relationships with all the programs with all the incubatees.
Got it. And then I actually have a question from the Peanut Gallery. I asked on Twitter if anyone had any questions for you guys, and related to the GOHM on Vesta thing. So somebody was asking, when additional capacity in Vesta Finance for GOHM Vault?
Very soon.
Okay, soon. Good.
Yeah.
I was curious about. I actually have some GOHM now, so I saw that and I was like, I should use that in the vault. So glad to hear that personally as well. And let's see, question 2 here. And I'm going to try to read. It's a very confusing question, so I'm going to try to dissect it as I read it. What is the estimated liquid circulating supply of ohm to geom when excluding protocol-owned ohm, Vesta Rari geom collateral, stake ohm geom, sushi, RB, frac swap gate, tokamak, etc.? I guess they're just trying to figure out like how much ohm is there out there.
So you know what? I don't know the answer to that, excluding all that stuff.
Yeah.
Um, but I think I understand the question. I'd have to go back and look at everything. That's kind of like I think what the question is trying to get at is how much ohm is like not locked up as collateral somewhere or not owned by the protocol or in a liquidity pool. So on our website, you can look up the amount that's not owned by the protocol. You know what? I don't know the answer is how much is actually circulating, but there is a good amount that is locked up in those protocols. And it's an interesting point, I think, you know, as it relates back to range bound stability, because the less ohm that is floating supply, really, that's like out there in the market, right? The less there is to fight against the range bound model, and the more stable the protocol is. And I like to think about this as like creating like a beneficial asset liability mismatch, right? Not in the bad way, but having more short term assets than short term liabilities. If you could think of ohm the token as a liability of the Treasury in some ways, right? And so the less ohm that is circulating, the better that ratio is. You can think of it as a current ratio of sorts.
Okay, and I got one last question, which is a softball, but oddly I'm interested in it also. And it's sort of a, you're so awesome. What happens when you become even more awesome? It almost feels like that. But so here's the question: what happens when there isn't enough ohm for all the utility that's coming?
That's a good question. I guess um, price will go up. If demand exceeds supply, then the demand should go. The price should push up into the upper ranges of the range bound system, and the Treasury should sell reserve bonds against it to push the price down and take in reserves. And if that buying does not abate, then the price will continue to go up, and the Treasury will continue to grow, and the ranges will regenerate around a new level.
Yep, got that. So I see Frax come up a lot when talking about you guys. What is your relationship with Frax? We know on this end we know Sam and DeFi Dave pretty well. So just curious, do you have a strategic alliance with Frax, or is it just
Yeah, I don't know if there's like an official strategic alliance, but very unofficial, like from the start. So we hold a lot of fracs. So I think like we, in a lot of ways, I think we're one of the first protocols to take in fracs to in our treasury in a major way. And they've been great partners for us. So we hold a lot of fracs. We are LPs in their Frax 3 curve pool. We have an Ohm Frax pool on FraxSwap. There's a lot of different ways. And we're working with them to get Geom listed on Fraxlend as collateral. That was one of the venues that will have Geom collateral soon. So we're very excited about that. And I don't think that's really an alpha leak. I think they've been talking about that publicly also. So I hope they don't mind.
right?
And there's a lot of different avenues for us to collaborate, because, there's a lot of similarities between the protocols. And we can really attack the market and capture a lot of share together, I think.
Yeah, agreed. And they're very clever. They're doing something very clever, like you guys are, right? And unconnected. Well, they're a bit more connected because they're fractionally, fractionally reserve backed. So they're not quite completely disconnected from the traditional banking system. You guys are completely disconnected. Well, actually, I would say you guys are connected also in the sense that you have a lot of USDC in your treasury. So I guess both you guys are sort of, you're trying to move away from it, but you still got to take injections from the traditional financial world as you all get on your feet.
Yep.
Is that characterization correct?
Yeah, I think that's right for now. So, like, Frax has USDC, right, as its backing. We have Frax and DAI, which are both have a significant amount of USDC backing. I think as Ohm scales, it will need to take in assets that are, probably like more decentralized assets, because there aren't enough stable coins or fiat stable coins that will have difficulty scaling, right, to the level at which we would like to grow, and we fully recognize that. But there are a lot of parallels today for sure, and I think I think it's actually very instructive looking at us together in that Frax also kind of acts as this decentralized monetary authority, right, where it can inject liquidity into various markets via its AMOs, right? The difference is that there means a lot of differences, but one of the main differences is that they maintain a dollar peg,
Yeah.
right? Which has a lot of positives, right, but also has some drawbacks in terms of monetary policy flexibility, where we do not have are not beholden to a peg. That certainly has drawbacks, getting people to wrap their minds around that, right, and adoption, but has a lot of benefits of not having that. We have that monetary policy flexibility, don't have peg risk or bank run risk, and have a lot of flexibility to go out into the market and provide liquidity.
Got it. Okay. So what chains are you guys on now? Obviously, you're on Ethereum. What else are you on?
So right now, mainly on Ethereum mainnet and Arbitrum. We have toeholds on a bunch of other chains. So we did a program called Proteus earlier this year where we tested out liquidity through incentive program on a bunch of different chains. We were on Avalanche, Polygon, Phantom, even like Metis and Boba, and found most traction on Arbitrum and Avalanche. But today it's mostly Arbitrum, and we also I forgot to mention Optimism as well. That we had a pool there as well, but now we're focusing our efforts mostly on Arbitrum.
That is pretty wild. Yeah, Arbitrum seems to be the new place for DeFi. Like it's this year's Phantom. Like last year, Phantom First was like the hip chain for DeFi and inventive new things. That energy seems to have fled Phantom, and now it's in Arbitrum. Are you seeing the same thing?
Yeah, I don't know if it's the same capital pool, but it certainly seems like that's where a lot of the capital in DeFi has moved, and that could be because of the protocols that have succeeded there. Like GMX, for example, has found a lot of success, and it's hard to say which one came first there.
It's a good point. Yeah, GMX, the invention of GMX and the GLP token, which I'm not going to get into here, but that seems to have driven the Cambrian explosion over on Arbitrum. And I also heard a rumor that, and I don't know if this is true or not, so I have to say that ahead of time, but I heard from a pretty good source that all of IBM's primary cryptography engineers left en masse about a year ago to go to Arbitrum.
Wow.
So they were all like, fuck this place, it's boring. We want to be in crypto where it's cool and all the hip kids are and where the future is. And they all just decamped and went to Arbitrum, which is interesting that they would pick Arbitrum out of all the chains out there. Why not Polygon that has all these crazy, biz dev deals going on, but not really much in the way of tech from what I understand. That's debatable, obviously, but certainly a whole cryptography division of IBM could bolster the tech at the very least.
Certainly. It's interesting.
Yeah. So, okay. Well, look, we're coming up on the 40-minute mark here, which is where I sort of try to cap things. What have I not asked that I should have? Is there anything I missed?
Oh, it's a good question.
Maybe I did my job too well. It's
yeah, I'm trying to think of those other stuff that.
No, I'm just if nothing's really glaring, then I guess we kind of we hit the major points. I think.
Yeah, I think we did. I think you did an excellent job.
Okay, let's do this then. Where can people find you and Ohm online?
Okay, so personally, you can find me at 0xJaLa on Twitter. Also, you could find me in the Olympus Discord. Hit me up. It's JaLa as well, anytime. I think my DMs on Discord are closed, but I'm in the server. I'm around. You can tag me. And on Twitter, you can find at Olympus DAO. A lot of really good content there on the V3 to get all the updates. And yeah, please join the Discord server. We do like weekly office hours and community updates to get all the information that you need.
Super cool. Well, JaLa, once again, my thanks for coming on the show. My name is Mark Jeffrey. This has been Hash Rate. We'll see you next time.
Thank you very much for having me. It was a pleasure.